Hello and welcome. I'm Uday Srinivasan, and along with me is also the Federal's editor-in-chief, S. Srinivasan. India's story of being the world's fastest growing major economy, the bright spot in an uncertain world, is getting harder to tell. The rupee is at an all-time low. Crude oil is surging. Private investment has stalled. Consumer demand is weak. And now analysts are reaching for a word that hasn't been heard since the 1970s: stagflation, slow growth, and rising prices at the same time. The worst of both worlds. Exactly 6 months ago, the economy was described as being in a rare Goldilocks scenario by none other than the RBI governor, Mr. Sanjay Malhotra. Today, however, the same economy appears to be showing clear signs of strain, with reports suggesting that the Reserve Bank of India is now weighing the possibility of raising interest rates. So, what went wrong? What needs to change? And how worried should we really be about this? To answer that, we are joined by one of India's most respected and most outspoken economists, a man who has advised governments, worked with the International Monetary Fund, the World Bank, and Goldman Sachs, and has always believed in calling a spade. Mr. Surjit Bhalla, thank you very much for joining us on the Federal. Sir, welcome to the show.
Yeah, my pleasure. Thank you for having me.
Yeah, so let me begin with you there, sir. Prime Minister Narendra Modi has asked citizens to cut back on gold, fuel, and foreign travel. He has halved his cavalcade. He has just held a 4 hour sort of a cabinet meeting in Delhi, his first of the year, pressing ministers on ease of living and ease of doing business. Mr. Bala, when a prime minister does all of this simultaneously, isn't that itself a signal that the economy is in far more trouble than the government is letting us know?
No, I don't think so. But I think what we need to examine is what is a problem. As you rightly said, 6 months ago, everything seemed to be in pretty good shape. So, what has happened now? And what has happened now is that there's a West Asian crisis, oil prices, etc. But I think what we need to look at, whether it is India or any other economy, is, if you will, the steady state ex ante before the February crisis started in West Asia. Because oil prices go up, oil prices go down. There is a war on, has been going on. If the war stops, oil prices might recover. So I think it's a very to think of policies and evaluations on the basis of a broadly war-induced economies around the world is incorrect. So if I can add, so scholars have been saying as to, look, let the rupee go or whatever policy prescription they have, and they're basing it on what is happening now. Now, my column, on which we are discussing, completely is ex ante, is before any of this happened. So, in other words, what was the problem with the Indian economy before any of this happened? And I try and outline that the problem of the Indian economy before any of this, basically till 2024, when we have pretty much complete data for all the economies in the world, was that foreign direct investment in India had pretty much collapsed. If you want some numbers, that it had gone down from something like 2.5% of GDP to less than 1% and probably 0.2 or 0.3%, depending on when you take. This is net FDI. So why is net FDI gone down, collapsed, which means foreigners are not investing? Now, net FDI is composed of the FDI coming in and FDI going out by Indian investors. So what has happened is that the net FDI is down both because foreigners are not investing in India as much as they did before, and Indians are investing abroad. So what's the problem? Why are Indians investing abroad, and more so than investing in India? And you find that very rare. In India, you didn't have that happen until about 2015. is, so I've tried to isolate. So this is a puzzle for all of us economists and trying to analyze the economy. That what you have is that, take the macro picture of the Indian economy. It's in pretty good shape. The current account deficit, not much at all. Inflation, if you exclude the last 4 or 5 months, inflation at record lows, whether you look at WPI or whether you look at CPI. So current account deficit is in great shape and inflation is in great shape. And growth is reasonable, maybe 6.5%, 7%, thereabouts. But the rupee is weak and foreigners are not investing. And I think the rupee is weak comes after the fact that investment demand has gone down, and therefore, and foreign investment demand has gone down, and therefore the rupee is weak.
Yeah. So Dr. Bhalla, yeah, if you can start looking at one by one, you're saying both foreign investment and domestic investments are not picking up. Now, if you can first tell us why foreign investment is not picking up. I think you have outlined elsewhere. I saw you were saying that the treaty which was signed in 2013, that was one factor. If you can explain that. And the second is, the real puzzle is that some of the Indian companies are sitting on huge reserves, apparently 11% of their total assets, some of the companies, and they are simply not investing, and they seem to be not coming out. It's as if they have drawn into a shell, and they don't seem to be believing that it is necessary to invest in a business to grow. Why this fear? Why this has happened? Can you take the two separately?
Exactly. This is the puzzle that I try to look at as to why is it happening. Because as you know, economic theory and whatever economic experience we have suggests this should not be happening. So let us take the FDI first, and then we'll look at the domestic investment not happening, sitting on reserves. And matter of fact, it's slightly worse than that. They're not so much sitting on reserves, they're taking the money out.
Right.
So I think, let me do the FDI, and the two are related, absolutely. The FDI, until 2015, basically, we were in very good shape. Like the rest of the world, developing world, everybody welcomes foreign investors because they bring in technology, they bring in money, they bring in global linkages. So we all know why FDI should be the most attractive component of an economy or indicator. Most attractive indicator of an economy is how much FDI you're getting. Now, in 2015, and this is where, if I can allude to what I call the deep state, but let's table that for the moment. I will explicitly try and answer. In 2015, we passed a new model bilateral investment treaty law.
Right.
What did this law say? Rather than welcoming foreign investment, it did just the opposite, completely the opposite, radical. And it said that, listen, you can come in, but if there is some problem, etc., you want a divorce with your domestic partner, then you have to wait 5 years and try and negotiate with your partner, the government, and everything else before you can even proceed to disengage yourself. And then you have to go to an Indian judge. Now, I remember making this point to the PM himself, that look, Indians don't want to go to an Indian judge. We are a developing country, and our legal system isn't as efficient. I don't know how much more I can say beyond that. Isn't as efficient as the systems in the Western economies. So what did the foreigners do? And here's where an interesting, if you will, twist takes place. I started writing as I mentioned, this law was passed in 2015. And I headed a high-level advisory group on investments for the government of India in 2018-19. And nobody mentioned, including myself, or nobody even noticed, because there wasn't much to notice about a decline in investment, because the FDI is governed by what laws you came in under, and you sign a 10-year treaty or 15-year treaty. So money continued to flow into India. FDI money continued to flow in until all of those commitments were exhausted. And then you could either adopt the new bilateral investment treaty or you don't invest anymore. And that's what happened. That foreigners found out by definition that this is the most onerous law passed by any country at any time. Prior to 2015, the BITS law was the same in India as in practically every other country in the world. We departed. I think it's for you and me and all of us interested parties to find out why did we depart. Now, the finance minister, as well as the government, noted that there was a problem. And if you recall, in the 2025 budget statement of the finance minister, she made 2 points. She's setting up 2 committees, or 2 things are going to be under review and change. One was a new bilateral investment treaty. And the second was deregulation, ease of doing business, etc. So they recognized that this was a problem. Much before the West Asian crisis last year, February of 25. After that, and this is where, if you permit me, we can go into the deep state, that basically the new law hasn't, even though the government has announced that they want to bring in a new BITS law, hasn't been, nobody knows concretely what it is. It is suspected that rather than a 5-year wait, it will be a 3-year wait.
3 years, yeah.
So, you know,
sorry if I may interject you. When you allude to deep state, are you also, and you're also referring to the fact that, an Indian judge will be adjudicating even such a BITS law comes, it has to go through, that's another factor you mentioned elsewhere. Now, when you say deep state, are you also saying that there is a certain institutional kind of erosion which has happened, which is also causing a kind of scare? Is that what you're alluding to?
No, yes and no. There is definitely some institutional erosion that's happening. Investors, domestic investors, are not as confident of investing in India. And we can point to the factors behind this erosion. For example, retrospective taxation. I mean, how many countries have, so it is, there is, and then there's retrospective taxation. There is export bans if and when the government wants to have an export ban. There is, so in that sense, ease of doing business is horrible or has become worse. So that is why, and there is another psychological factor behind this. Why did we come up? Now we can speculate, why did we come up with this change in 2015, BITS law? And I think, if you look at it, it's got to do with, we are a big country, we are a big market, the foreign investors are really dying to come into India. And we are in a completely global world now, have been for quite some time. And there are opportunities elsewhere for any foreign investor. So, They didn't come. And I will just go back to 2010. And it doesn't matter which government has been, though I think the bits is the change in bits was very, very unfortunate. But in 2010, the China decided to move up the value scale in terms of production of items. And all of us, you were in India then, I was in India then, etc., that this is the time for China plus one in 2010. What happened? Nothing. So Vietnam became China plus one. Bangladesh became China plus one. And we remained as before. So I think there's something. So now let me permit me to go.
This entire so you can come to the domestic one. Before that, this entire theory of we being a very large market, a very big middle class, 300 to 500, 600 million, therefore it's no company around the world can miss us. Huge opportunities, a very trained manpower, engineering prowess, stable political situation, to some extent even judiciary. All these things you think have all kind of no longer working, which was all considered a positives for India.
Well, no, we still look, and maybe if we look at what is needed to get us back on track, we will be able to identify what is needed. India is still, I remember, okay, let me just, last June, almost exactly a year ago, I wrote an article in the Indian Express, India's 1991 moment again. If you recall, exactly a year ago at this time, we were talking about a trade treaty with the US.
Right.
Okay. Now, we've been talking about trade. So I said, if we were, and I still believe that, mind you, if we have a good trade treaty with the US, I think India will be transformed and the foreign investors will be transformed and we will be transformed. So I think you need to ask the question, why isn't every other country has been able to have a trade treaty with the US, Mr. Trump notwithstanding? We all recognize that Trump will not be there. And even as soon as 6 months from now, he might very much be a lame duck. But independent of that, you plan a trade treaty is not for the moment. It's not that, my ego is hurt and I can't do this. They can't tell us what to do, etc. But forget Mr. Trump. We haven't had a trade treaty. We've talked about a trade treaty with the US for the last 30 years. Hasn't happened.
So is it for the reason that, there are a lot of pushbacks when the trade treaty was coming? The pushback was in the farm sector, consumer goods imports, a whole lot of other things. These all things came up. So again, it comes back to politics, which you mentioned earlier, that, politically they seem to be after winning the West Bengal on its peak. But is that consideration holding them back for this agreement as well?
Well, let me take you back to 2022. Absolutely right. The farm sector comes up. In 2022, Punjab, Aminder Singh asked Montek Ahluwalia to do a report on farm reform. Montek produced that report. We, the Prime Minister, asked for that we need to change our farm laws. And this is where the deep state comes in. Okay? So in 2022, the PM, very rightly, in my view, wanted to get new farm laws. It didn't happen. And, very amusing and tragically amusing, it didn't happen because the detractors said, this wasn't done for discussion. Now, how much, there was no discussion, and he just announced an ordinance, right? In 1991, we had major reforms. How much discussion was there in Parliament before those reforms? How much? None. So this is where the deep state comes in. There was discussion in the media, in the press, by scholars like yourself, like myself, etc., saying we needed reforms. And we did. But remember, we reformed practically every area except in agriculture, where we de-reformed. Okay? In other words, negative reforms in agriculture in 1991. So therefore, that hope was that that would be corrected in 2022. Finally, we were going to correct it. So the deep state are those people, the dairy, Amul. Okay? Amul dictates what our farm policy should be. Dairy is not, and then you hear, oh my God. I mean, so right. I think it's a combination, of factors. And the deep state is somebody out there, vested interests, we call them, and they do the policy change or non-policy change through the bureaucracy. So the bureaucracy is a very important element of the deep state, but it's not the driving force. The driving force are interest groups.
Yeah, so I'm still puzzled. What prevents this government to overcome all this? Because politically, Prime Minister Modi continues to be the strongest. He's when state after state, further, whatever little erosion happened in 2024, he seems to have overcome that. And nobody here believes that, the power is not, they cannot be wielding this power. In fact, on the other hand, there is an allegation is being wielded absolutely. So what holds them back? All these things are in their hands now. So in fact, you pointed out that global situation, whatever happening in Middle East and other things, cannot be used as a factor here because this predates. So what actually is holding back?
So look, I absolutely in my throughout, and when you must have interviewed me in 2000, I was the same. Everybody said that my DNA is plus, because no matter what, I was very, very optimistic about India. Okay, the middle class, whatever. And now I'm not. But what gives me optimism, so I'm recovering from my zero base, is precisely what you said. Now, okay, the political situation is solved, quote unquote. So if in this opportunity now that we don't reform, then we'll never reform. So I think this is a golden opportunity. So West Asian oil crisis is a God-sent crisis for India to reform. So I am hopeful, precisely for the reason you said. I cannot fathom, I cannot think of what could be holding the government back. I mean, we'll find out. We won't have to wait long. So I'm hopeful, but your point is absolutely correct. We've never been better placed to bring about structural reforms, and that moment is now.
So let me bring you back to the current situation, that where Prime Minister has advocated for austerity, is lined a number of measures, and we know that oil prices energy prices really very high, and there is no immediate agreement seems to be in sight as far as the Gulf War is concerned. And oil marketing companies are still saying that their under recovery is over 30%. and which means the price hike which has happened, just about 3 rupees or so combined, is not enough. There's going to be much more. And there are a number of other measures which may have to be taken by the government. Though CAD is under control, everything is under control, still, how how do you perceive this immediate situation? How far it can go? How worse it could be? What kind of pressure we have to sustain? Because OMCs are going to raise price; they have to recover.
No, no, absolutely. Look, let me answer it as follows. First, what is needed right now immediately? Okay. And it's not suddenly raise the price of oil, etc. You can do that gradually. We've done that before and wait it out. We've got a lot of reserves. So therefore, it's not as if there's a crisis on our hands like it was in 1991. We can wait it out. But I mean, waiting it out without bringing in policy change is stupid. So the policy change that I think the PM can announce right away, okay, and that will help sentiment, help dollar flows, help investment, everything all at once, is say we go back to the BITS law pre-2015. Okay? Tomorrow, we welcome foreign investors over here. We will never ever do retrospective taxation again, which, Mr. Jaitley had said, that it was still on the books, but we won't practice it. So make it legal. We will never ever do any more retrospective taxation. And we do the new old FDI law, and we change taxation. We want to tell the foreign investor, we love you. We want you. So I'll give you the following. Capital gain taxes, it is about 37% for foreigners. 37%. Why would anybody invest in India?
Right.
And we don't need that money.
Yeah. So you're given a very pointed solution for FDI. What about the domestic investors? Government has sunk in so much money, public, infrastructure creating, hoping that there will be crowding in of investment, but nothing seems to be happening there. So what is the solution for them, you would suggest?
Look, once you have no retrospective taxation, the foreigners are coming, then, we have to make some noises as to that, raids by the ED will not be there. I mean, I'm sure the PM and the party can think of, they know what ails the domestic investor. And they can, come clean. Say we want to pursue, as the PM said, Viksit Bharat. We think this is now what is required. We welcome foreign investment. We welcome domestic investment. We don't think the ED is, the investment climate. They keep saying ease of doing business. Okay? So they outline 10 things that will improve ease of doing business.
So how much you think also some economists also pointed out the role of champion business?
Look, I have been writing for long, I myself, but here's how the champions were done in the rest of the world. The champions were identified, firms identified by the government, given incentives to export. Now, you can't have champions where in non-tradables. I would open up non-tradables a lot more to domestic investors. As far as tradables are concerned, then you give them big-time export incentives. That's what Chaebol, how every other country has done it. So my taxation or recommendation, you want to provide incentives. So you guys figure out, we can figure out, it's not that difficult to provide incentives. But it can't be that regardless of the situation, you'll come and invest in India, or the domestic person will invest in India. And, so I think the solution is pretty straightforward. And the reason it is straightforward, we have the experience of 150 countries practicing this for the last 50 years. And now you have Claude, and you can ask Claude to tell you what they have done. Don't even have to do any research.
Yeah. So you have some very straight, actually you're shooting from the hip as far as what are the solutions as far as FDI is concerned.
Not shooting from the hip, it's shooting from the head.
Yeah, okay, fine. You are actually very clearly outlining. Let me reframe my my response. So really wonderfully straightforward. Everything is very, but the point is, I think you're also suggesting for the fact that a lot of other things which probably have been clouding, people's perception, something like which is actually holding us back, that we are a Vikasit Bharat, that we are now almost on the verge of being a developed country, or we are the fastest growing economy. I mean, all these acronyms, all these build-ups, how much you think are also responsible for the kind of complacency which probably has covered this government?
Now, the key word in all that you have said is complacency. Okay. And I think that no denying, I think you ask any government representative, any person on the street, you ask me, they're winning elections. No matter what, we're growing at 6%. It may not be the fastest growing economy in the world. It's not. But we are growing respectable. So there's a huge amount of complacency. But relative to what the PM's own ambitions, which he's tried to transmit to us on Viksit Bharat, being a developed economy, etc., we are nowhere close. So we need to change. And that is what the PM can do. PM can say, listen, no need to be complacent, because our ambition is to grow at a much faster pace. And these are the policies I'm bringing about in order to generate that. If not, he should be frank enough to say, unless we do this, unless we take deregulation, okay, unless we do this, we are not going to achieve Viksit Bharat. Not a chance. And there are 4 or 5 things he outlines. And it has nothing to do with West Asia. It has nothing to do, with oil prices. This is structural. That's where I started off this discussion, is that it has nothing to do, at least my analysis has nothing to do, because, every country in the world is facing this problem of high oil prices, this, that. So, that's normal. So that's nothing specific to India. Now, if we have, and then make, for example, on oil prices, what we should do, we should decide, the PM should decide, his advisor should decide, that listen, this is how much oil taxation we're going to do. This is how much revenue we need. And after this, okay, this is for the base period. You can't decide on the level now. Once it get back, and they can come up with estimates that when the international price of oil goes down to $60 or $70, after that, If the oil price falls, my taxes will go up, and if the oil price rises, the taxes will go down. So, I mean, be completely transparent, and I think you can accept it, I can accept it, everybody will accept it. Then listen, there's a very clear-cut formulation of what needs to be done, and it will be followed through. So no point making promises and then don't follow through. And this will, I think, instill discipline in the government, instill and prevent the deep state from acting out its own self-interest. Because this has been outlined before in an objective fashion. Everybody accepts it. You accept it. The media accepts it. The opposition should accept it. Maybe they won't. But, right now, as you said, there's not much of an opposition, political opposition. So he has to create. He has to say, we need this. And he can say in a half humorous fashion, we really, we have done very well politically, and they have. This situation, I don't think, has ever before prevailed. So he can say, this gives us the opportunity to make some bold decisions.
Now, the rupee is at an all-time high, and that's been the talk here. So nearly 97 rupees to the dollar, close to the psychological cliff of about 100. Some say let it find its own level, but with India importing over 85% of its oil, a weaker rupee means costlier fuel and all that. So, should RBI step in? Because we are getting this Bloomberg report this morning that said that the RBI is deliberating whether they should actually, it's in a dilemma. There's going to be a monetary policy committee meeting on April 1st, so June 1st week, on June 5th. So, they could be, cutting interest rates as well. So what do you think? Should the RBI step in, or you think, the intervention is a battle that it simply cannot win?
So look, some very serious scholars like Geeta Gopinath and like Arvind Panagriya have said, let the rupee find its own level. And they have alluded to what happened in 2013, when the rupee was very weak, and it was, I think, in the high 40s or low 50s, and went to about 67, etc. With due respect, I think the comparison with 2013 and 14 and letting the rupee go is very, very false. Because structurally, we are in much better shape than then. So that's not to say we should fix the rupee or not let it, but to say that, look, because here's the implicit and explicit assumption. We let the rupee go and all problems will solve. Right? The rupee will find its own level. What happened to bits? What happened to foreign investors? Are they waiting for the rupee to go down? Are they waiting that the government can do retrospective taxation? What happened to the ease of business climate? So, I think it's a very knee-jerk liberal solution, and a comparison is very false. That's not to say we should let the rupee be, don't get me wrong, but that's not, change everything I have offered today as policy recommendations will change the structure of the economy, will change the incentive structure for everybody at all time. And I think I'm willing to have a bet that if you do that without intervening in the rupee market, the rupee will actually strengthen, not weaken. But if you don't do anything, then of course we are back to where we were. But also, if you don't do anything and you let the rupee go, that's the worst of all possible worlds, which is we are pretty, okay? So, attack the problem, attack what is wrong. And that's what we've discussed, what is wrong. What is not, it's not, our current account is not in problem. We have plentiful of reserves. We are not anywhere comparable to 2013 or to 1991. Now, I had said in my article that we are one of fragile too, along with Turkey. But the reason for rupee weakness, and then I outlined the rupee is weak, has been weak, I mean, for 7 years because we've not been following the right policies. And in terms of investment demand for dollars and supply of dollars. Remember, there are two sides to the exchange rate, the demand for dollars and the supply of dollars. So we have said demand is there and we will restrict the supply of dollars. So what happens to the price? I mean, it's Econ
Right.
101.
Yeah.
So,
Yeah,
I think those people who argue that let the rupee slide are missing the forest for the trees.
Yeah. So one final question from me. Uh, you see, so what seems to be happening is, I'll come back to the way you started your thing, especially the Indian Express article, that you described BJP winning West Bengal as a peak political performance, a landmark achievement. So my question is, after all the political achievements and overall the political victory, the end point of that should be the welfare of the people, productivity, growth, affluence, more money in the pockets of people. So all those are ultimate objective to improve, poverty levels further, absolute poverty levels, improve those. All those are the major objectives. Ultimate objective is that. But is it now, from the experience so far and what you feel, what you have been saying for the last half an hour, do I see it like this, that, uh, what's the point of such a victory? Are we here really missing the woods for the trees?
I think, look, there is no point of such a victory. And I think I'm hoping that the PM recognizes that. Remember, he had also argued against freebies, and yet the BJP has done as much freebies as the other people have done. So I think it really, so he has had the right ideas. The farm laws, I really want to emphasize, that would have been a generational shift in policy, which was not allowed to happen. So I think people like you and me, etc., we should look, why didn't that happen then? In parallel, why it should happen now? Because you can no longer allude to that I need the farm vote or some other vote. Okay. And the political victory has two sides. One is that people believe in the BJP and people believe less in the opposition. It's a win-win situation. So, this, if so, I will give something that I can go wrong, or I can be proven wrong. If now we don't do it, if the PM doesn't bring about structural reforms now, then no need to have discussions or debate on the Indian economy, because we are at a real
Okay.
turning point, potential turning point. Internationally, domestically, our image, everything that the PM wants, that people like you want, that I want, for India to be a bustling economy, part of real global leader, etc. It's in our hands now, or it's in the PM's hands. So he will be responsible if it doesn't happen, and he should get a lot of credit if he does bring about change.
Thanks, Dr. Bhalla, for your very forthright remarks. And we seem to be at the crossroads as far as your entire, if I have to sum up, you're saying this is the point. This is where there needs a decisive action from the Prime Minister himself, no less, to give a new direction to India's economy. And you also had a bit of a warning there that if not now, then when? Thank you so much.